What is good, boys? New week, new video, new topic. Today we are going to talk about one thing very important: how to identify when the market is not tradable. Okay, let's start off with the video. So, what non-tradable actually means? So, at least within my opinion, not every day is meant to be, I guess, traded. Not every day is meant to be something in which you take an active execution on. At least from what I've seen, some days, certain days are just meant to kind of trap impatience, trap people not able to, like I've said multiple times, sit on your hands and just not do anything. Those people on those certain days are bound to be destroyed, are bound to lose, are bound to just not know when to not trade. It's simple as that. And I will be basically showing you guys what non-tradable means, what non-tradable conditions mean. So, off with the first point, no clear direction. What does that mean? At least to me, I kind of trade with a bit more continuation, meaning I, for example, you have this draw, right? You have this specific point of interest in which you think price is going to go to, right? Personally, I wouldn't want to see price going up and down, up and down, up and down, just within a barcode like that. What I would want to see is if my point of interest is right here, I would want price to go up, probably down, retrace, just a normal uptrend, creating higher highs and higher lows. Okay, so when you see that price is not going within any specific direction, or is maybe, let's say, going to this direction, and then a minute later it's going the complete opposite, there is no clear direction in which price is going to. Price is clearly moving without a clear trend, and that's the last thing you want to do. That's the last thing you want to trade. If I were you, like I've said, sit on your hands and wait until prices, moving within like this continuous basis to a specific point of interest, at least the way I trade. Some people trade, within a range, whatever. But the way I trade is I trade specifically to different points of interest, draw on liquidity, blah, blah, blah. But I wait for price to be in a trend. It's true what they say, trend is your friend. So truly respect that. Once you see prices going into a direction, that's where you execute. All right, next point, conflicting signals. What do I mean by that? Basically, time frames, your overall time frames are just kind of contradicting each other. One time frame is kind of, respecting bullish order flow while the other one isn't. And you really, like I said, have no clear direction of what's going on in general. Okay? Within this case, your structure is usually unclear. Like I said, it's probably in a range, probably not, creating higher highs, higher lows, or vice versa, lower lows, lower highs. So don't trade that. Don't trade it at all. It's a non-tradable condition. Just sit on your hands, don't do anything, and wait until it is, fitting your overall conditions that make it tradable. If I were you, I would ask yourself, or myself, which I still do sometimes, if I were to take the setup right now, if I were to click enter, whether it's a buy, whether it's a sell, will I be upset with myself if it does not play out? If I end up losing this trade, will I be upset with myself? Will I be upset with the setup that I took? If yes, then it's best you don't take the trade. Because usually, how do I explain this? It's like when you take a setup that, aligns with the conditions that, you currently are trading on, good conditions, then it fits your setup, usually to a T. Draw on liquidity is, par, it's on point. Then that if you were to take a setup and it doesn't play out, that like it's just a statistic. It's just, a losing statistic. Some trades are just bound to not play out. Some setups are not bound to play out, but at least you took something in which you were extremely confident in. So if you were to take something in which deep down you're not, confident in, you know that there's a higher chance of losing than winning this trade because it doesn't fit your conditions. It's not in the, like I said, proper conditions to be traded in. It's not really the setup that you should be taking in general. You probably don't take this setup usually when you're back testing, right? So why take it live? Why do that? Why detriment yourself and why have a higher chance, higher probability of losing a trade? So remember, not taking a trade is still a position in itself. Don't, put yourself too down about not taking a trade for a day or even for 2 days. However long it takes to get the setup that you think is right for you, that you think fits your conditions, fits your drawn liquidity, fits, everything in which you would consider to be a good setup, that's when you take it. That's when you actually execute and even put your balls on the table and say, okay, I'm gonna put X amount because I know, or I have, this confidence, this higher confidence that this trade will play out. So remember, protecting your capital is the best thing you can do when you're unsure about a trade, when you're unsure about a setup, whether you're unsure about overall conditions. Okay, remember, real traders, traders better than me, better than you, better than anyone we know, they usually sit it out when they're not confident. But when they are confident, they go balls deep, put a whole bunch of money on it, and they usually win. Why? Because they're confident in certain trades that they've seen before play out, and they sit out from trades in which they know usually, go bad. So that's enough for today. Kind of a short video, but thank you guys for watching. New video maybe this weekend, depending. Maybe this weekend or next week, but I am doing one video a week at the very minimum. And yeah, thank you guys for watching. Subscribe, leave a comment, leave a like, and yeah, that's basically it. Thank you guys for watching. Peace.